The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Thursday morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN just after 9 a.m. Eastern Time. We got some retail sales this morning. We got some weekly jobless claims as well. You have an ECB meeting going on as they hike 50 basis points as expected this morning. Lots of action. We pick things up in, negative territory. On an hourly basis, just going back, I wanted to encapsulate kind of the moves we've had from going back to all the way November 30th. We had Chairman Powell speaking. Then you had the jobs number on Friday, December 2nd, non-farm payroll number, because we got weekly jobless claims today, not to confuse the two. You see the rapid volatility in this market, man, down to 39.25. Even if you take some of that spike high out of the market for Tuesday morning, in terms of we got that huge acceleration on the data that morning, we bring it back. Huge movement in this market. We're at 39.77. We're down by 53 points. We're about 50 points away from where we were chopping around at the lows last week. So we'll see how the market reacts this morning. Far cry from where we were on Tuesday's spike high. That was on the CPI data on Tuesday. I was struggling to pull that one out. NASDAQ 100, we're negative by 1.5% right now. You talk about some volatility, man. How about almost 1,000 points up in the NASDAQ to that spike high? Even if you take the spike out of the equation, we were still above 12,000. You were at 11,400 in the lower part of last week. We're at 11,682. The Dow is above 35,000 on that spike. So much for 35, so much for 34. We got a 33 handle, 33,870 in the Dow right now. Russell, negative by 1.4% at 1810. Bitcoin holding up relatively well, man. You put this thing on a chart, right? There's your action in terms of the volatility. It's been a one-way trip to higher prices. Did you put Bitcoin at almost 18,500 yesterday, man? Well, you just lost 1,000 on Bitcoin. And folks, I'd be careful in that crypto sector, man. I don't understand how Bitcoin has not suffered more with the amount of wealth that has been lost in crypto with the Ponzi scheme of SBF. Crude, 76.15. Well off the lows of $70 last Friday. Seems like we're back in an uptrend channel, even though we're getting some negative action this morning when you put this thing on an hourly. Just looking at the last 5 days, higher highs and higher lows. We'll see how today shapes for the gold contract, for crude. Gold contract trading lower. We got some action in currencies, of course. Dollar catching a little bit of a bid today. Following yesterday's action, we have gold negative $30 at $17.89. We hit a low of $17.82 earlier, and we jumped to notes and bonds. A lot of chop in this market. Tuesday, right? Interesting to see the divergence going on with the moves that we saw in the equity markets versus the move that we've seen in bonds, notes, yields, and currencies. There's your spike on Tuesday, right? The market gave it all back and then some. And where are we on the 10-year? We are higher price and lower yield on the 10-year, man. Following the Fed decision yesterday, kind of right where we got a spike high yesterday at 115, we'll call it on the 10-year. And I've been talking about this one, man. It will be interesting if this holds above this trend line, folks, because, boy, it broke out of it. And Tuesday was quite an acceleration, testing that channel line, trading higher. We're pushing the highs right now at 114.31, call it 115 in the 10-year. And we got the 30-year right now challenging above that high as well at 131.24. We jump over to the VIX on some negative action on Thursday. We got the volatility index. All things considered, right? We're getting a sell-off, man. And you got like no acceleration in the VIX right now, which is remarkable. You see the drop-off on Tuesday ahead of the CPI number. That was when we got the huge acceleration higher. And look where the VIX is. The VIX is where it was when we had the market spiking to highs on Tuesday of 41.80. So we've lost about 200 points in the VIX since that spike high. 200 points in the S&P since that spike high. And the VIX is pretty much chopping around at near 22. Same area we started on Tuesday trading before you got that market sell-off. Interesting action, man, across the board. We jump over to the dollar index. As I stated, boy, look at this drop-off, though, man. Whoo! So you got Christine Lagarde speaking right now. I assume she's saying something that's causing some action, man. You see the run-up to 104. We've seen quite a pullback right now to 103.73. Let's see how the dollar yen is trading right now. Interesting with the action in gold. Gold getting spanked, man, even with the yen. Euro US dollar, there's some action for you, man. Above 107. We were flirting with 106 at 8 o'clock. Interesting action. We got so much news going on, folks. Whether we got a Fed decision yesterday, we have an ECB decision today. And what do we jump into? Let's jump into retail sales, man. Retail sales. Headline, dropped most in 11 months, missing the estimates. Overall value of purchases decreased 0.6% in November. 9 of the 13 categories fell, including autos and furniture. Retail sales fall by the most in nearly a year. You check it out, folks. We've seen some strong numbers. Can't deny that number in November, man, in terms of the drop-off. They rose 1.3% in October. You see a decline of 0.6% in November. Excluding gas and autos, retail sales down 0.2%. Figures not adjusted for inflation. Now, the median estimate was 0.2%, folks. So that's if you take out gas and autos. The headline number comes in a decline of 0.6%. So retail sales, disappointing. Could be a factor of Fed tightening fiscal policy. We'll see how that plays out. The value of sales at gas stations were down 0.1% of the pump. Restaurants and bars, the only service sector category in the report, rose almost a full percent, the fourth straight increase. You still have pockets of momentum, the service sector, one of them. The report suggests some loss of momentum in consumer demand for goods amid high inflation, while rising wages and pandemic-era savings have helped support shoppers. Americans are beginning to feel the squeeze. Savings rate is near a record low, and credit card balances have surged. You got widespread discounts across the board, man. They got to get rid of some of that inventory, man, in a big way. Let's see. Thursday's report, non-store retailers down 0.9%. So that's going to include Amazon. Yeah, one of the only categories to rise were grocery stores amid higher food prices. Again, remember, not adjusted for inflation. Not surprising that you have groceries going up, man, with some of the prices in food. I think we'd all agree, folks, that food's got a problem for inflation, man. Now, the Fed is not as concerned with that because it's very difficult for them to influence food and energy, which is why they look at the core so especially. You can have an opinion on whether that's legit or not, but nonetheless, that's where it goes. The control group, which is used to calculate GDP and excludes food services, auto dealers, building materials stores, and gas stations, fell 0.2%. Market was looking for a gain. So we see a miss there in a big way, hinting at potentially a weak economy. And then what do you get, though? You get weekly jobless claims at barely 200,000, man, pushing strength. That is pushing strength. Applications falling to 211,000. Economists were looking for 232. Continuing claims, little unchanged, 1.67 million. You check it out on the chart, folks. That doesn't look like a deep recession, man, when you got weekly jobless claims barely ticking across at 211. The one thing to keep your eye on, though, is the continuous claims. That one's rising. You can't deny that one. And again, continuous claims always 1 week delayed. 1 week delayed versus the initial claims data. And they point out in here that the data can be choppy week to week, especially around the holidays. You got a 4-week moving average, though, fell by 3,000. So even the 4-week average falling by 3,000. 211,000, man. That's not what a scary recession looks like. Check out that euro, man, charging higher. Stay tuned, folks. We'll be coming back talking to our man Kevin Hincks from TD Ameritrade Network. We'll be right back. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Sign up for Basil's live webinar airing this Thursday, December 15th. Basil Chapman will be hosting his first ever live trading webinar just in time for the holiday season. While Basil will focus on the S&P E-mini futures, other symbols from gold, crude oil to natural gas and more will be traded as appropriate. Basil will demonstrate specific Chapman wave techniques as well as answer questions live. Spots are limited and Basil goes live Thursday, December 15th. You don't want to miss it. To sign up, visit the front page of TFNN.com. TFNN, educating investors.
Welcome back, folks. We have the S&Ps pretty much at session lows right now. You're negative by 60 points. That's a solid 1.5% in the red. You get the NASDAQ 100 off 199 points. That's 1.7%, we'll call it. And you get the Dow right now off 1.2%. Let's jump over to our man, Kevin Hincks. Every trading day, folks, at 12 noon Eastern time right here on Tiger TV, the TD Ameritrade Network with Fast Market. Your host, Kevin Hincks, Tom White. The whole team at TD Ameritrade Network, folks, they get some great guests. They walk you through the day's market action. They walk you through hypothetical trade setups, talking about options, talking about defined risk. Boy, Kevin, we got a lot going on this morning, man, between digesting the Fed yesterday. We got retail sales. We got weekly jobless claims. We got a Fed, an ECB hike. Where do we start this morning, Kevin? Good morning.
You know where we start this morning, Tommy? Good morning. December 6th. That's when Jamie Dimon came out with the other 4 CEOs of the big financial firms. Jamie Dimon from J.P. Morgan, Brian Moynihan from Bank of America, Jane Fraser from Citi, Charles Sharp from Wells Fargo. They all came out and talked about weakening consumer demand, right? How do they know that? They have the high-frequency data on swipes of their cards. And so they came out looking at weakness. Fast forward to this morning, we get a retail sales number much weaker than expected, from 1.3% positive a month ago to down 0.6 this month, Tommy. So X vehicles, much lower than expected, down 0.2. X vehicles and gas, down 0.2. All significantly lower than last month, showing exactly what Jamie Dimon and these other CEOs alluded to, a weakening U.S. consumer, Tommy.
It's pretty interesting, Kevin, that we get those numbers. And, boy, those are some pretty important numbers, man, when we look at the economy, retail sales, how the consumer is doing, what they're spending money on. And then what did you think of? And I know weekly jobless claims can have a lot of variance, and I know it's not on the top echelon of economic numbers, but I found it interesting that we get such weak numbers for the retail sales this morning. And then we get a weekly jobless claim number that, in all things considered, in more normal times at 211,000, man, very indicative of a pretty strong economy. What's your take on that number following, which you just laid out pretty well, the weak number we got on retail sales?
Tommy, I'll take you back to Jerome Powell's comments yesterday when he broke down the 3 key parts of inflation. He talked about goods inflation, which is the supply chain, which is turning over and doing much better. He talked about housing services, that we already saw what's housing, and he expects rents when they start getting renewed to be renewed lower. But then he talked about 55% of inflation is non-housing core services, which is labor. And that, he says, is the stickiest part of the inflation variable, because things like jobless claims that confirmed this morning, leisure and hospitality, you've got a flood of people coming back into the job market as their savings start to dwindle, like all these economists have been talking about, Tommy. And so it's causing a strange stickiness in terms of inflation, because more people coming, a strong labor market. You have a tough time talking about a recession when the labor market is doing so well.
I agree, man. It's pretty interesting, especially the pockets of this economy in terms of the pockets of retail sales, services, leisure, and hospitality, probably most so of all of them. Absolutely remarkable. What's your take on the ECB and the Fed? We haven't talked to you since we got the Fed. We get the ECB this morning. Boy, we got some currencies going. We got the euro back above 107, charging higher with Lagarde speaking this morning. What's your general take on whether it was yesterday, today? Two big Fed decisions from our Fed and the ECB kind of driving some of the action.
Yeah, Bank of England came out this morning about an hour and a half ago or so and raised by 50 basis points to 3.5%. Remember, Tommy, Wednesday over there, they got their CPI data. It's 10.7%. You think ours is high? Theirs is 10.7. And
Amazing.
So their problem is their economy is getting weak. And with inflation, they've got unique issues at the Bank of England. So they've got to be careful. The ECB, they raised by 50 basis points. Christine Lagarde talking about she sees significant increases ahead. So, and they also plan to shrink the balance sheet. So, yeah, a lot of different subtleties going on in each banking entity that's dealing with interest rates. You've got the FOMC, you've got the Bank of England, you've got the ECB, all making nuanced changes to interest rates, but all higher, Tommy, by 50 basis points. That's the one consistent.
It's pretty wild, man. I was listening to Chairman Powell's press conference yesterday, getting a lot of questions, obviously, about the 2% target. He seemed pretty adamant that they want to get to that 2% target, and they're not going to let up until then, whether that plays out as things go forward. But what do you think of the general idea that the chairman is putting out? And, boy, he had some strong words about 2%, and I was not chuckling, but boy, 2% seems so rough right now for them to stay the course, considering what what may be happening in the economy until we get to that level. But what's your general take on what the chairman's saying, what some of those dot plots were saying yesterday, versus some of the market sentiment, which doesn't quite believe that they might be able to stay so high for so long before they might need to begin potentially even cutting? What's your general take? Because that's a big conversation going on right now, of course, in the markets.
Certainly the 10-year yield is telling a different story than even the 2-year note. And what Jerome Powell said, remember, he projects the 2023 Fed funds rate to be 5.1%, then 4.1 in 2024, 3.1 in 2025, and then 2.5 in the long run. That's a pretty interesting take on where we are. The Fed, the 10-year yield is telling a different story right now, longer term, than Jerome Powell is saying for Fed funds go into 2023. How about these numbers, Tommy? 2023 GDP only up 0.5%. 2023 unemployment rate 4.6%. So you're talking about 0.9% higher in unemployment for next year. So you're talking about a lot of things. But Jerome Powell said he wanted to get rates significantly restrictive. He says we have more work to do, and he's going to stay on it until the job is done. All his key phrases that he used before, he used again, Tommy.
Yeah, it was an interesting press conference, and it would be especially interesting to hear the internal thoughts going on in his head, because, we all have doubts, folks, and boy, I'm not sure how you get inflation down to 2% without some pretty tough stuff going on in terms of the market and the economy. But guess what? Inflation, man, is, I agree with what he's saying in terms of, boy, it is hurting a lot of people out there. That's one of the things they got to get under control to have price stability. And I hope they do. Bottom line. With that in mind, Kevin, we go forward to the opening bell. We got markets and negative prices in pretty dramatic fashion. What are you guys talking about on Fast Market coming up at 12 today?
Couple earnings plays. Tommy, Adobe in our first segment. We'll look at Darden Restaurants with Folio and cover that in the second segment. And then NVIDIA today in the third segment. Take a look at some semiconductors.
Three great stocks, man, moving and shaking. NVIDIA, that's always one I was looking at. You talk about some big spikes up to 346. And Kevin, we got 30 seconds. What do you think of Tesla? I wanted to ask you. You know, we're talking a lot of tigers and tigresses in the Tigers Den, of course, talking about it. You got Elon selling. You have ARK, Kathy Wood buying. What's your general take on Tesla if you got 30 seconds here? It's a tough one, but boy, quite a pullback with everything going on at 152 this morning, down yet again.
Well, if it looks like Elon Musk has sold more stock, that explains some of the sell-off in Tesla. But that being said, at a long-term basis, fade or doubt Elon Musk at your own peril, Tommy.
I love it, man. That's why we bring you on the program. That's why we watch Fast Market. Kevin, I appreciate it on a busy morning, man. We'll be watching at 12 today, and we'll talk to you next Tuesday, man.
Have a great day, Tommy.
You too, Kevin. Folks, tune in every day. It'll be a wild one as usual. It's a Fast Market, folks, every day at noon Eastern Time with Kevin and Tom. We'll be right back for the opening bell.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and technique to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We got markets open right now. You got the S&Ps trading at 39.80. You're negative by 50 points right now. Checking out the action. You see the volatility. We came into we came into the retail sales and all those economic data points basically almost right where we're trading at right now, which is interesting. All that market action taking place overnight. We came into all of that action at a price point where you already had markets down about 40 to 50 points on the S&Ps. We're down by 47 right now. NASDAQ 100, you're negative by 169. That's off 1.4%. You get the Dow right now off a full percent and the Russell off a full percent as well. We jump over to Tesla, as I mentioned. So Elon selling more Tesla shares. You're off 1.6%. There's the drop off on the sale of Tesla, I believe, and there's your acceleration on the open, kind of right back to where you were. Those numbers. So we sold about 22 million more shares, worth about $3.6 billion. The transactions took place between Monday and Wednesday this week, according to the filings. Probably part of the reason you had Tesla trading lower. Now, I'm going to have to get my calculator out for this one, man. Elon has now sold 94 million shares and 200,000 at an average price of $243, folks, for a pre-tax proceeds of approximately $23 billion. Okay, now what's interesting, especially so, is that you have Tesla trading at $155. So his average sale price is about $90 above where we're trading at, folks. And $90 times the 94 million shares he's traded means that he has pocketed about $9 billion over what his value would be worth right now, folks. Okay? So don't underestimate Elon's ability to be a trader in the same way, man. Not a coincidence that he came out, in my estimation, with his purchase for Twitter when Tesla was here. It's almost hard to comprehend, right? Not a coincidence, folks, that is where he disclosed that he was going after Twitter, and that's where potentially things came into fruition for the sales. You know, take it for what it's worth, man. And as Kevin said, listen, he's a brilliant man, and I'm not betting against this share right now, but I'm also not buying any right now, man, because he's asleep at the wheel nonetheless. You know, you got Tesla rolling over positive finally on a big negative market day. But this thing's been a one-way trip down, folks. You put it on a daily, okay? You're talking about, we were just at 308 less than 3 months ago, and you get cut in half, okay? September 21st, where was the S&P? September 21st, the S&P was at 3,800. So you have the S&P up 175 points at the same time you have Tesla getting cut in half. So don't think it's just a market pullback, man. Be careful of Tesla, folks. They're still dealing with some lofty valuations, and any other person on the planet would never be able to do what they're doing in terms of having their stock get cut in half. And seems like he's paying attention to nothing but Tesla, and the stock's just getting decimated. So, you know, eventually it may be a buy. Kathy Wood thinks it's a buy, but that's her share portfolio right now. And boy, they're talking about her in the den as well, man, because it's been quite a spectacle decline right now. With ARK off another 2%, off 71 pennies. This thing, a Cinderella during the pandemic. But guess what, folks? You are now where we came into 2020 at about $50. You're off 30+% from prior to the pandemic. Okay, so if you were holding ARK at the beginning of 2020, you went from 50 to 160 back to 35. You're in a losing position. Every single person that's been in ARK since the pandemic is basically in a losing position right now. That is a wild one, folks. And this one's going to be a wild one where we go today, man. VIX, pretty reasonable level on the VIX, man, considering what's going on, right? We don't see a spike at all. So not sure what's going on there. But no acceleration in the VIX to the upside whatsoever, as we have the S&Ps pushing 1.5% to the downside, and we got the NASDAQ 100 challenging session lows off 1.9%. Let's see how many of the retail sales. Amazon taking it on the chin. Not surprising when you look at the retail sales this morning. Macy's off about 2.8%. Walmart shares off about 0.8% right now. Target shares off 2.5% right now. Let's jump over some of the banks as we get some movement going on. Bank of America off about 1% right now. JP Morgan off 1.1. Take a look at the airlines. Delta off 1.3. Everything just getting decimated, man. American Airlines off about 1%. We jump domestically. Southwest Airlines off about 0.7. JetBlue, man. Stay away from JetBlue, man. Look at this thing. That is a tough looking chart, man, for JetBlue. Not sure what's going on, but I mean, give me a call if you see any strength on this chart, man, because I cannot find it. I mean, you could make the case, I guess, that you could step in here and put your stop on the other side. You're challenging the COVID lows. At least you have the back against the wall and you put a trading plan in place. You trade below those lows. Maybe you trade below $6, you get out or something like that. But that is a high-risk trade, to put it lightly. We jump over to the cruise ships. Carnival, I've talked about these a couple times. Carnival, you're just well within the channel line here. Lower lows and lower highs continuing for the better part of over a year at this point. That channel started in June of 2021. We jump over to a Norwegian. Norwegian, a little bit of a different story. Let's talk about, you're looking for a buy in some of the cruise ships. Maybe you let Norwegian come back and test that channel line. We're at 1476. That'd be an area just above 12 maybe for Norwegian. Let's see how some of the currencies are moving. Dollar index. Yeah, look at this, man. Not sure what Lagarde was saying, but let's jump into some of what they talked about this morning in terms of the ECB, because, boy, they're looking for inflation to persist, and even if they're right, okay, and I would say they probably are being a little bit bullish in terms of their estimates. So they hike rates. They see significant increases ahead. They announced the plan to shrink their balance sheet beginning next year, okay? So beginning March of 2023, it's going to begin to reduce their balance sheet by 15 billion euros a month. It's going to announce more details about the reduction. Holding it's in February. It's a long time from right now, man. That's 3 months away. Okay, they raised by 50 basis points. Now, I want to get into some of the numbers. How about this one? This is the ECB. They expect the average inflation of 8.4% this year. Okay, but it's almost the end of the year. 6.3% in 2023, folks. 6.3%. That is some persistent inflation. And then what I found most surprising is they see a 3% drop off from 2023 to 2024. And then they see us back to pretty close, not us, this is the ECB. They see us back, they see Europe back to 2.3% in 2025. Folks, if you think anybody can be accurate to any degree talking about what inflation will do from next year to the following year, good luck to you, man. And yes, somebody's going to be right. Somebody's going to be wrong. Okay, who knows who it's going to be. Not that difficult to talk about inflation in the next month or two. Pretty difficult to forecast it 12 months out. Almost impossible in my mind right now to forecast it 2 years out. And I state that because the drop-off they're looking for is in 2 years. They're not looking for a steep drop-off next year. Even in their estimation, they're talking about 6.3% next year. And then they're saying, yeah, but things will really start to have an effect. And it may, folks, it may. It's just who knows what's going to happen there. What's going to happen with the Russia-Ukraine war in 2024? It's still 2022, man. Okay, so they have a very tough road ahead. We were talking to our man Teddy Kegstad yesterday, and he was talking about, if they keep hiking, what's going to happen to the dollar? If the dollar gets crushed, it's lower today on that ECB news conference. What's that going to do? It's going to create a weak dollar. That's going to create a weak currency for the U.S., and that's going to be inflationary when we are importing goods. Stay tuned, folks. We'll be right back.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We get the market basically chopping around pretty close to where we opened right now. You get the S&Ps down 64 points. You see the chop, but we're trading lower. That's a 15-minute Basil. So let's just put it on a minute so you can really see the action on the open. We were as high as 39.85, folks, and we just gave up 20 points pretty much in a heartbeat, man. Right off the open, we're challenging the lows right now within a couple points of the S&Ps. NASDAQ 100, we just dipped to a price level of 11,619, just off that price level in the Dow. Dow plunging 1.5% right now. So much for the Dow. Being the strongest index out there, everything getting decimated this morning, and the Russell off 1.4. So you got Russell off 1.4, Dow off 1.4, NASDAQ, the accelerator, off 1.9, and the S&P's off about 1.6 right now. We jump back to the currencies with so much movement. Dollar index, 103.60 was about the low. We're at 103.83. And yeah, you look at that thing on a daily, it's the lower lows, man. And as I stated, boy, if the ECB really thinks that we're going to be above, I keep saying we, if Europe's going to be above 6% inflation for the entire part of next year, and they're only looking for the impact of their restrictive policy to really take an impact in 2024, that is something that could have a pretty dramatic effect on the dollar, which could affect what our Fed has to do. Because what happens if, and this is what I was talking about with Teddy yesterday, it was a great conversation just to think about, okay? What happens if we possibly get inflation under control, okay? And this is just laying out hypotheticals, folks. Nobody knows what's going to happen. What I try and do is, okay, you try and imagine the possible scenarios, okay? And there's endless amounts of possible scenarios. This is where biases are coming in. You imagine the possible scenarios and then apply a probability to each of those scenarios and then trade off it, okay? So one of those scenarios, and this is where probability-wise, you're going to have to determine where you think the probability of this occurring is that we start to get inflation under control. You could make the case that that's happening with the CPI numbers coming down a bit, et cetera. What happens? The Fed is able to pause their hikes. They may even consider cutting if the economic damage is damaging enough to the economy. But what ends up happening is if they're pausing or cutting, the ECB is in a rapid hiking cycle. The ECB is going to start rolling off their balance sheet potentially in 4 months from right now. So you see how late they are to the party. That is going to put strength in the euro because you're going to have high yields with a higher interest rate in Europe as they are on their hiking cycle. You're going to have a weaker dollar as it's correlating to our lower yields. We have the 10-year below 3.5% today on some of those retail sales. I think 10 years at about 3.46, okay? And what could that do? That could put some pressure on the Federal Reserve, because if those currencies exacerbate things too much in terms of a weak dollar, diminishing our buying power, okay, causing what? Causing more inflation, making it more difficult for prices to come down, because anything that we're buying anywhere else is more expensive on a weak dollar. It's just one of the scenarios that could play out, folks, but it is a very real scenario, as you see what the ECB is talking about, because, boy, those are some pretty startling numbers, and the ones I want you to look at most in the ECB is what they're looking for in 2023 and 2024, because basically they're saying, hey, things are going to be rough in 2023. We know that. We know that we can't have an impact that quickly. We're only 16 days away from 2023, and they're just kind of beginning on that real hiking cycle. So don't worry. Things aren't going to change in 2023, but guess what? In 2024, inflation's going to come back down to 3.4%. Even that, folks, following the numbers they're on right now, you compound 8.4, 6.3, and 3.4. What are you pushing? You're pushing almost an 18.4%. What is it exactly? 9.7, 17.1% inflation over 3 years is the number that they're looking. You used to spend $100 at the grocery store. They're talking about $117 that bill will cost you. And listen, I know it goes beyond groceries, but you get the point. I don't know how you have any type of certainty or conviction when you make estimates from what inflation is going to do from 2023 to 2024, let alone just trying to go a month or two out. So be skeptical of that, because that sounds like to me that they are very worried in terms of the impact of their hiking and how long it may take. And they're confident it's not going to happen next year. But what are they going to say? What do they say? It's never going to happen? No, they're going to say, okay, it's not going to happen next year, but hang with us to 2024. Boy, that's a tough one, man, when you look at what they may have to do to get there. And yeah, they're going to start rolling off the balance sheet in March. They're going to give you details about that in February. So some time to go, man, as they are just getting started. All right, what else do we have pulled up here? We got a little bit of FTX talking about. Let me see. Yeah, the China story is a big one, man. Foxconn ends most closed loop restrictions in iPhone City. And yeah, talk about, I don't know how this one sorts out either, man. You got Foxconn, though, is easing most of the restrictions at its factory in Zhengzhou, is that how you say it, maybe? Facility that had become the flashpoint in the country's efforts to contain infections. It's ending point-to-point system in which employees had to restrict daily movements to between their dorms and the campus. Imagine if we had that going on in America. Thank God we don't, folks. You go literally camp out at your job, and you're not even allowed to go anywhere else but to your dorm and the campus. I mean, it's just amazing what they've been doing, man, and they're dealing with it right now. Easing those restrictions, and things are just exploding, and you're not even going to get real counts, man. They're just not even counting any people anymore. They've just come to terms with the fact that, guess what? They got to get over it. They got to deal with whatever spread is going to happen all at once, and we'll see how it plays out. But as we know in America, folks, you get waves, even when you get big waves, right? Yeah, and Apple's already talking about shortfalls of 6 million iPhone units, et cetera. So that's going to be a wild card as we go forward as well. That's not even the FTX story I wanted to talk about, man. Because there was a story out there that, what happened? You had, all right, I'll talk. One of the executives on FTX came out and told the Bahamian officials that there may be some commingling of funds. What I found most intriguing about that is that they only did it after everything was pretty much exposed. Let me find the article. Yeah. So this is on CNBC, on Bloomberg. You'll see it. FTX insider turned on SBF days before bankruptcy, flagging potential fraud to regulators. Ryan Salami, co-CEO. Now, everybody's trying to cover their own butt, folks, okay? And he only did this a couple of days before the bankruptcy, but this was after the run on the bank. This was after everything already happened, okay? So it says days before the bankruptcy, he disclosed possible mishandling of client funds by Bankman-Fried to the Bahamian officials. It was dated November 9th, but that was after everything had already pretty much imploded. And on the same day, he did head towards the U.S., which is interesting. So he alerted the Bahamian officials. He jumped ship to get out of the Bahamas, which I found most especially interesting. Yeah, and we'll see where that goes. But he's saying that only 3 people could have made that transaction. He was not one of them, of course. So we'll see where that falls, folks. We'll see. Nonetheless, it's a tantalizing story to say the least, but I'd say leave everything with a grain of salt because everybody's trying to cover their butt. And it's a Ponzi scheme for the ages, unfortunately. And this market picking up steam to the downside. Session lows with the S&Ps off 1.8%. Stay tuned, folks. One more segment. We'll be right back to finish up the show.
TFNN has just launched their new trading room, the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they are expanding their reach with the Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. In the Tiger's Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs, and join an interactive trading community with hundreds of members exchanging ideas. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tiger's Den at Discord is accessible on mobile or tablets as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of TFNN.com.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We got markets accelerating lower. We're talking about session lows right now with the S&Ps off 1.82%, man. Quite a fall from where we were over the last few days of this week, man. But guess what? Where are we? We're right where we started the week on futures on Sunday night, man. You talk about a volatile market. Last Friday, we get non-farm payrolls. You finished the day at about 39.35. Futures opened on Sunday night at about 39.60. We made it all the way to 41.80. Now, you could call that an irrational high, okay, on the CPI data for 41.80. But guess what, man? We're right back to where we were. This market, anytime you get this type of volatility, folks, be aware that is not indicative of a strong market. That means the market is very unsure of where prices deserve to be. And that's a dicey scenario. Now, Where did we accelerate up to, folks? We chopped around right near the 618, man. That's where we're rolling over. You're now back to the 50%. We'll see where we go from there, but market's struggling to find a bid. You get the NASDAQ 100. Now we're off 2.2% almost on the NASDAQ 100. We jump around to some of the FANG stocks. We'll kick it off with Apple. You talk about a pullback, man. Apple off 2.6%, folks. Apple, I always say it's 16 billion shares. Today, they've given up more than $50 billion in market cap alone today. You jump over to Microsoft, 1.9% to the downside. You jump over to Google. YouTube off 2.8%. I say YouTube, man. Boy, the kids in my house, folks, they watch a lot of YouTube. We watch a lot of YouTube. I tell you, the more I'm around it, man, there is nothing like YouTube. TFNN, we use YouTube to stream our Tiger TV every single day. We archive everything we do on our YouTube channel, folks. If you haven't done it yet, please come on over to YouTube. Just search TFNN. You can subscribe to our channel. That's free. You get notifications for any new programs that we host. All of the programs we do, we archive directly on our YouTube channel. You can check them out anytime. I was talking to friends yesterday saying, it'd be interesting to see. You got Netflix, you got Disney, you got everything. But YouTube, man, there is nothing like YouTube. And Google's a lot bigger than YouTube. But seriously, as I look at those streamers, a free streaming service driven by advertising. Well, that's suffering lately. But going forward, that's not going anywhere, folks. All right, we're at session lows as I come off the air, folks. Basil's not doing his program because he's doing live trading today. You can still sign up for that, but he'll be back tomorrow. We got a replay, live programming after that, folks. Stay tuned and have a great